Hey everyone, welcome back to Corporate Decoder, the place where we crack open the financial secrets of big companies and reveal what is really going on, or where we'll be diving deep into the financial statements of Vanguard Growth and Income Fund. And let me tell you, there are some insights in here that might surprise you. Before we get started, if you like understanding the nitty-gritty of what makes these companies tick and how they manage your money, make sure you hit that subscribe button. Also, we've got a fantastic community over on Discord linked in the description below where you can chat with us and other finance enthusiasts. Alright, so what we have here is an annual shareholder report for Vanguard Growth and Income Fund. This is essentially a deep dive into how the fund performed over the last year, ending the 30th of September 2025. We're going to look at the costs, the performance, and some of the financial guts of what makes this fund run. Let's start with the money. It is always good to know what you are paying for. For a hypothetical $10,000 investment in their investor shares, the cost for the year came out to be $43. That might sound small, but it is 0.39% of that $10,000. Now, for Admiral shares, which is another share class this fund offers, the costs were even lower, just $31 on that same $10,000. Which is 0.28%. So Vanguard is definitely making a case for efficiency here, especially with those Admiral shares. Now for the big question, how did this fund actually perform? The report says that for the 12 months ending the 30th of September 2025, the fund outperformed its benchmark. That is good news for investors. The narrative around this outperformance points to a market that was a bit of a roller coaster. There was optimism about things like deregulation and tax cuts, but that was often balanced by worries about rising interest rates and how much stocks were worth. The Federal Reserve even started cutting interest rates in September 2025 to deal with an uncertain economic outlook. This is interesting because they had paused rate cuts in December 2024, showing that the economic picture was a bit murky. The fund's success came from 8 out of its 11 industry sectors. They did particularly well in information technology and consumer staples, thanks to smart picks in those areas. Communication services also gave a nice boost. However, even though consumer discretionary and financials did well on their own, the fund's stock picking in those specific sectors actually hurt its relative performance. So it looks like they were good at picking winners in some areas and making them even better, but they stumbled a bit in others. Let's look at the longer term picture. They show a table comparing an initial $10,000 investment in investor shares versus the S&P 500 index and the Dow Jones US Total Stock Market Float Adjusted Index from 2015 to 2025. This type of comparison is really helpful to see how the fund stacks up over a decade. For example, looking at the end of 2025, that initial $10,000 investment in investor shares grew to a hefty $40,584. Compare that to the S&P 500 index, which turned that same $10,000 into $41,530, and the Dow Jones Total Stock Market Index, which grew it to $39,210. So in this specific snapshot, investor shares performed very competitively, slightly behind the S&P 500, but ahead of the Dow Jones Total Stock Market Index. And it is not just a one-year story. Their average annual returns over 10 years show investor shares at 15.04%, the S&P 500 at 15.30%, and the Dow Jones Total Stock Market at 14.64%. This puts the fund in a really strong position against major market indexes over the long haul. It is a good indicator that their strategy has held up over time. Now, let's peek at some key fund statistics as of the 30th of September 2025. The net assets were a massive $441 million, which is $17.4 billion. That is a lot of money being managed. The fund holds 653 different investments, showing a well-diversified portfolio. And the portfolio turnover rate is 94%, meaning they're actively buying and selling holdings, which can be a sign of a dynamic strategy. The total investment advisory fees were about $23,211,000, or $23.2 million. Looking at where the money is invested, information technology is the largest slice of the pie at 34.9%. That makes sense given the tech sector's significant role in the market. Financials come in next at 11.8%, followed by communication services at 10.9% and healthcare at 10.0%. Consumer discretionary is also a significant holding at 10.7%. This breakdown shows a clear tilt towards growth-oriented sectors, especially technology, which aligns with a fund aiming for both growth and income. Admiral shares, Vagiac's annual shareholder report the 30th of September 2025. This section switches gears to the Admiral shares, and the performance narrative is largely the same. They also outperformed their benchmark for the 12 months ended the 30th of September 2025. facing similar market conditions. Interestingly, the fund statistics section shows the same numbers for both share classes. $17, 441 million in net assets, 653 holdings, and a 94% portfolio turnover rate. This tells us that the underlying assets and management strategy are the same, with the difference being in the share class structure and associated costs. The portfolio composition is also identical, with 34.9% in information technology, 11.8% in financials, and so on. This reinforces the idea that the investment strategy is consistent across both share classes. One notable change mentioned is that in February 2025, the expense ratio for the Admiral share class was reduced. This is a positive sign for investors in that class, showing the fund is actively working to lower costs. The report mentions that the fund has a code of ethics for its key officers, and it was updated with some technical changes. This is standard practice to ensure ethical conduct in financial dealings. It lists the members of the Audit and Risk Committee, and importantly, states that all of them have been deemed to be financial experts and independent. This is crucial for good corporate governance, as it means there are experienced, unbiased individuals overseeing the fund's financial health and audits. This section details the fees paid to their independent auditor, PricewaterhouseCoopers LLP, for the fiscal year ending the 30th of September 2025. The audit fees were $32,000 and $38,000 for the prior year. The really interesting part here is the non-audit fees for the larger Vanguard group. These fees, which include audit-related fees, tax fees, and other fees, totaled over $5.6 million for 2025. While these are significant amounts, the report states that the Audit Committee has determined that these non-audit services are consistent with maintaining auditor independence. It is a balancing act between getting necessary services and avoiding any conflicts of interest. This is where we get into the nitty-gritty of the financial statements themselves. They list out a table of contents for the financial statements, including the report of independent registered public accounting firm, tax information, and the schedule of investments. Now, let's dive into the schedule of investments. This is where you see the actual companies the fund owns. For communication services, they hold Alphabet Inc., class of shares valued at $585,931,000, which is over $500 million, and Meta Platforms Inc., class of valued at $508,181,000. In information technology, the biggest holdings are Nvidia Corp at a staggering $1,500,931,000. That is $1.5 billion. Microsoft Corp, valued at $1,207,345,000, and Apple Inc. at $1,014,491,000. This shows a massive concentration in a few tech giants, which is a key driver of the fund's performance, but also a significant source of risk if these companies falter. Their holdings in energy are led by ExxonMobil Corp, valued at $159,684,000. In financials, MasterCard Inc., Class A is worth $273,706,000, and Wells Fargo & Company is valued at $266,979,000. This list really paints a picture of where the fund's money is actively working. Looking at the statement of assets and liabilities as of the 30th of September 2025, the fund's net assets totaled $17,440,874,000. That is $17.4 billion. The majority of this is in investments valued at over $17.3 billion. Liabilities are relatively small at just over $70 million. The net asset value per share for investor shares was $71.62, and for Admiral shares, it was $116.89. The statement of operations for the year ended the 30th of September 2025 shows total income of $195,619,000. Expenses were $48,369,000, leading to net investment income of $147,250,000. What is really interesting here is the realized net gain from selling investments, which was over $1.5 billion, and the change in unrealized appreciation basically. The increase in value of their holdings that they still own was over $1.1 billion. The net increase in net assets from operations for the year was a massive $2,834,569,000, almost $2.9 billion. The statement of changes in net assets shows how the fund's total assets changed year over year. The net increase from operations for 2025 was close to $2.8 billion. However, total distributions to shareholders were about $1.7 billion, meaning a significant portion of the gains were paid out. Net increase from capital share transactions was about $628 million. Overall, the fund's net assets grew from $15.66 billion in 2024 to $17.44 billion in 2025, a healthy increase. The financial highlights tables provide a per-share view of performance. For investor shares, the total return for the year ended the 30th of September 2025 was 19.00%. For Admiral shares, it was 19.12%. These are strong numbers, especially considering they are compared against the S&P 500's 17.60% for the same period. The report also notes that the ratio of total expenses to average net assets for investor shares was 0.39%, and for Admiral shares, it was 0.28%. This is very competitive, especially for an actively managed fund. Now, let's touch on the notes to financial statements, which are crucial for understanding the details. NOTA talks about security valuation. Basically, they value their investments based on market prices when available. If a market quote isn't readily available, they use fair value methods. The fund also uses derivatives like futures contracts and swap contracts. These are financial tools that can amplify gains or losses, and they're used here to manage market exposure and cash flows. The report highlights that these strategies carry risks, including market volatility and counterparty risk, meaning the risk that the other party in a contract might not fulfill its obligation. Note B details the investment advisory fees. They have multiple advisors: DeShore Investment Management, Los Angeles Capital Management LLC, and Wellington Management Company LLP. These advisors get paid based on the assets they manage, and some of their fees are tied to performance relative to the S&P 500. Base fee structure can align the advisor's interests with the fund's shareholders. Note H mentions that the fund invests in affiliated companies, meaning companies within the Vanguard group. For instance, they hold shares in Vanguard Market Liquidity Fund and Vanguard S&P 500 ETF. This is common in large fund complexes and helps manage cash and provide market exposure. This is the auditor's report. PricewaterhouseCoopers LLP states that the financial statements present fairly, in all material respects, the financial position of the fund. They conducted their audit according to PCAOB standards, which is a good sign for reliability. This section details how the Board of Trustees approved the advisory arrangements. They considered the nature and quality of services, investment performance, costs, economies of scale, and other factors. They found that the advisor's fees were below the average for similar funds, and that the fund benefits from economies of scale due to breakpoints in the fee schedules. Alright, let's put on our investor hats and look at the bigger picture here. Vanguard Growth and Income Fund, based on this report, seems to be performing quite well, especially when you compare its long-term returns to major market indexes like the S&P 500 and the Dow Jones Total Stock Market. The fact that they outperformed their benchmark for the year ending the 30th of September 2025 is a strong positive. The portfolio's heavy concentration in information technology, particularly in giants like Nvidia, Microsoft, and Apple, is a double-edged sword. This strategy clearly paid off handsomely in the reported period, driving significant gains. However, it also means that if the tech sector or these specific companies face a downturn, the fund's performance could be significantly impacted. This is a key risk to keep in mind. On the cost front, Vanguard continues to impress with very low expense ratios. Especially for their Admiral shares, this is a major win for long-term investors, as lower fees translate directly into higher net returns over time. The board's renewal of advisory contracts, considering factors like performance, cost, and economies of scale, suggests a well-managed and thoughtfully overseen fund. The fact that they use multiple advisors, DeShore, Los Angeles Capital Management, and Wellington Management, each with different approaches, also offers a layer of diversification in their investment management strategy. So, what is the verdict? Vanguard Growth and Income Fund appears to be a strong performing fund with a growth-oriented investment strategy, competitive fees, and robust governance. The main thing to watch is the significant exposure to the tech sector and the potential impact of market shifts in that area. For investors seeking growth and comfortable with the associated risks, this fund looks like a solid contender. Alright, that is our deep dive into the Vanguard Growth and Income Fund's latest annual report. What do you think about this fund's sector allocation and its performance? Do you invest in similar funds? Let me know your thoughts in the comments below. If this analysis was valuable, please hit that like button and subscribe for more corporate breakdowns. And definitely check out our Discord community linked in the description. We're building a great space to discuss these topics. Thanks for watching, and we'll see you in the next video.